Good morning, students. Welcome back to this session on accounting. So we were discussing about consolidated financial statements, and we are going to continue with our discussion on this. So let us do a quick recap of various concepts in relation to consolidation. First of all, for a consolidated financial statement, group is mandated, and group should have a holding company and a subsidiary. Now, in respect of holding company and subsidiary company, there has to be a control. Means the holding company should have control over the subsidiary. We also discussed that it's not necessary that subsidiary company will be only one. It can be multiple subsidiaries. Further, the subsidiaries can be inside India or outside India. Yeah, so it can be either way. Next aspect in relation to consolidated financial statements, which is the most important point which we discussed, was about consideration of single economic entity. Means whenever we prepare the consolidated financial statements, we need to consider all the entities of the group as if they are one entity, and that will become the basis of consolidation. Wherein we also discussed that if there are any transactions between the group companies, those group companies which are considered for preparation of CFS, they will get eliminated. And why so? Because that will be a transaction which is inside the group and not outside the group. So for our purposes, when we prepare the CFS, we need to only look at those transactions which are outside the group and not really the one which are inside. Next is about various principles of consolidation which we need to consider, out of which some of which we discussed, and that was about the line by line addition. Whenever we prepare CFS, the methodology that we follow in respect of all the entities is that all the items of the balance sheet, of the P&L, of the cash flow, each and everything will be added on a line by line basis when preparing the consolidated financial statements. And therein a problem may arise. And this problem may arise when the subsidiary is not wholly owned by the parent. It is only partly owned by the parent. Now, what is the problem? That only a part belongs to the parent. So ideally, parent should have considered only a part of the financial statements of the subsidiary. But because of this approach, wherein the parent picks up complete consolidation, means the complete financial statements of the subsidiary. So that's why the part which doesn't belong to the parent, which is also called as minority interest. Remember minority interest? What was minority interest? Part which doesn't belong to the parent, means the part which doesn't belong to the majority shareholders. That part needs to be shown separately, and this part is called as minority interest. This is shown separately on the face of the balance sheet, because this is that part which doesn't belong to the group, but still it's been consolidated in the CFS. So that's why in the CFS we are showing this part separately to the users of the financial statements, that this is a part which doesn't belong to the group. All right. Next aspect in relation to CFS was about the consideration of goodwill and capital. Herein we tried to draw some correlation between the amalgamation, wherein we compute this goodwill or capital reserve. So whenever we start on the consolidation, what do we need? Subsidiary. And the subsidiary, let's suppose if it is acquired. So what do we do? First of all, whenever there is an acquired subsidiary, so in relation to this acquired subsidiary, we need to compute the goodwill or the capital. So what will be the goodwill? Goodwill will be the excess of purchase consideration over and above the net assets. And in case purchase consideration is not in excess, it is lower than the amount which is acquired, amount of the net assets which is acquired. So in such a case, this goodwill amount will become negative, wherein instead of calling it as goodwill, we will call it as capital reserve. So we may have these two types of situations. But For our purposes, it's always important to compute goodwill or capital reserve at the first place. And this has to be done on the date of acquisition. Okay. Similarly, we need to compute the minority interest again on the date of acquisition. But consolidated financial statements are not prepared on the date of acquisition. They will only start from the date of acquisition. They will be prepared at the year end. That means at the balance sheet date. So that's why this minority interest, which we would have computed on the date of acquisition, will have to be remeasured on the date of the balance sheet, or you can say on the reporting date. Similarly, goodwill or this capital reserve also needs to be reassessed at every point of time. Okay. Now, this is broadly about some things that we discussed. So now moving further, now we will get into some more principles of consolidation, wherein again we'll talk about this minority interest computation, adjustments related to minority interest, adjustments related to goodwill or capital reserve. Yeah. So what we can do is we can now pick up illustration number 2. Okay. In this illustration, if you can just also let me know, because this was a part of your homework, if you have had any problem. Yeah, because this was your homework, we still will pick it up for the practice. So if you have had any problem, please let me know. And please also confirm whether you have been able to complete the homework or not. Because in the last session, we discussed few things for your homework. One was about the illustrations, and second was about this revision of entire thing that we did. Yeah, so quickly, if you can confirm whether you have completed the homework. All of you quickly, I'm waiting for a response. Okay, so I think Shamim is asking about this dividend concept only. So this dividend concept, anyways, we are going to cover when we pick up all of these illustrations on. Yes, any more queries from your side? And Sakshi has confirmed she has completed the homework. What about others? What about others? Very good. Shamim has also completed the homework. Quickly, if all of you can confirm about the homework. Great. Manish has also confirmed. So it appears you have completed the homework. Huh? But still, we'll pick up this illustration number 2 and we'll just quickly get on to its solution. Yeah, okay. So if all of you can go to page number 10.23. Illustration 2. XYZ purchased 80% shares of ABC on 1st of January 2000 X1 for 1,40,000. So now it's a transaction which has taken place on 1st of January 2000 X1, wherein X has purchased 80% shares of ABC. XYZ has acquired ABC. Okay, and with this 80% acquisition, we can very well say that the control has been acquired. So this means that ABC becomes subsidiary of XYZ on this date. Amount paid for this acquisition is 1,40,000. On this particular date, issued capital of ABC is given to us 1 lakh. And the reserve balance. Reserve means this P&L account balance, that is reserve. Yeah. So this is 1 lakh plus 60,000. So we understand ABC had 1 lakh as the share capital and 60,000 as the reserve. So all in all, this is 1,60,000. Now during the year ended 31st December X1. So we are following the calendar year now. ABC earned a profit of 20,000. So during this year, up to 31st December X month, ABC earned a profit of 20,000 and declared and paid a dividend of 15,000. So now 20,000 has been earned and dividend has also been declared and that will also be paid. That is 15,000. Now you need to show by an entry how the dividend should be recorded in the books of XYZ. Number 1. So first thing is about the dividend adjustment that we need to show. And this dividend adjustment needs to be shown in the books of XYZ. Now who is the XYZ? XYZ is the parent company. It's the company which is receiving the dividend. So this is one. In the books of XYZ. The next point is, what is the amount of minority interest on 1st of January X1 and at the year end? Also check whether there should be any goodwill or capital reserve on the date of acquisition. So means 3 things are required to be done. One is minority interest needs to be computed, goodwill or capital reserve needs to be computed, and this dividend adjustment needs to be shown in the form of an accounting entry. So quickly, if you can just start sharing your responses, because most of you have completed the homework. And Nishma has confirmed, Anantraman has also confirmed, Anushka, I think she has also completed. But on registration number 3, she has completed, no problem. Sharon has completed. Okay. So I think Manish has shared the response. Manish is saying 12,000 is the goodwill and 12,000 dividend needs to be deducted from 140 and 33,000 minority interest on the profit. No problem. So we'll see. And you can also start sharing your responses in the mail. Now, in this scenario, if we go to the dividend part first of all, so what do we see? Dividend has been declared out of the profit which has been earned. Because whenever dividend will be declared, first of all, what is it that the company will use? Profits for the year. And now, for us, every time, first assessment which is required to be done will be to look at the pre-acquisition period and the post-acquisition period, and also about the reserves or the profits which are there in the pre-acquisition period and the post-acquisition period. So for us, the cutoff is very simple because it's the beginning of the year. So on this particular date, acquisition has taken place. Means throughout the year, whatever has been earned by the subsidiary company, that is the post-acquisition period. So this dividend is declared out of post-acquisition profits. So out of 20,000, 15,000 dividend has been declared. So that's why, where do we take this dividend to? This will go to the income of the parent company, because this is coming out of the post-acquisition profits. Simple? Yeah. But one thing which you have to remember is that even though dividend declared is 15,000, this entire 15,000 will not be received by XYZ. Why? Because XYZ is the shareholder of only 80%. So XYZ will also get only 80%. XYZ will not get 100%. Okay. So what is the accounting entry which XYZ will pass? And debit. Because they have also received this 15,000 into 80%. What does it become? 12,000. To dividend income. 12,000. Which you can also say is the P&L. So you are taking it to P&L. Okay. And you should always remember to also write the narration. Yeah. So let me just see if your responses are same. So I'm just waiting for the responses because Manish had shared. I'm sure Manish you have looked at it. Okay, quickly, you can just start sharing your responses because all of you have confirmed you have completed the homework. So I think Anushka had the same answer. Very good. What about others? I'm hoping that your answer was also same. So we now move on to the next part. Now, as a next step, we need to compute goodwill or capital. So every time this acquisition will take place, either the goodwill or the capital will arise, capital reserve will arise. Generally, some amount will be there in this. Normally, you will not see that goodwill or capital reserve will be zero. Generally, you'll have some number. So let's get on to this goodwill or capital reserve. Now, as of now, we don't understand whether it will be goodwill or capital reserve. So that's why whenever you write your answer, you can just share, or you can just write computation of, maybe you can write both goodwill or capital reserve, or you can just leave it back. Because once you get the answer, then you can write whether it will become goodwill or the capital reserve in the exam. So now, what is the first thing you'll write? Purchase consideration. Purchase consideration is 1,40,000 that has been paid by XYZ to acquire 80% of ABC. 1,40,000 has been paid. Now from this, what do we need to reduce? We need to reduce the net assets. And what are the net assets of ABC? 1,60,000. So now out of this 1,60,000, what do we pick up? 80% of this. 80% of this. Okay, so we can also pick this less share capital of ABC, which will be 80% of 1 lakh. So this becomes 80,000 and P&L balance of ABC, which will again be picked up on proportionate basis. So this will be 48,000. So this will be negative. This will also be negative. So now, what do we get? This, what do we get? We get 12,000 as the positive balance. Now, because this number is positive, so what does it reflect? That purchase consideration is paid in excess of the net assets acquired. So, whenever we have net assets which are lower than the purchase consideration, it shows as if some more amount has been paid and which is in the nature of goodwill. So, this will become goodwill for our purposes. Okay, yeah. So, goodwill for our purposes will be 12,000. And because we don't have any further information, so that's why we can very well say that this goodwill will continue to remain same at the end of the year also. So this is the amount which has been computed on the date of acquisition. So we are computing goodwill, and this is on the date of acquisition. But whether this amount will change at the year end, currently, on the basis of information in the question, we can say that this will remain same. Okay. Now, last part is about the minority interest. In the meantime, let's just see your responses also. Okay, great. So I think Anantraman has computed goodwill. It is 12,000. Great. And Anushka is also getting 12,000. Nishma is also getting 12,000. Nishma has also shared the accounting entry. Okay, I think this is coming a bit late. Sakshi has also computed this. Very good. Sanjay has also shared the computation. Sanjay has also shared about the minority interest. Anushka has also shared the numbers of minority interest. We are coming to that only. Okay, Jameel is asking about the post-acquisition aspect in relation to this dividend. So Jameel is saying, so dividend adjustment rules, whatever earned post-acquisition should be transferred to P&L. Yes. So if you go back to your understanding of investments, means AS13, what do you understand over there? So any income that you earn on the investments and which is out of the post-acquisition profits, that will not get reduced from the amount of the investment. That will be taken to the P&L. If you have to reduce something from the amount of the investments, then it has to be for the period which is prior to the acquisition. Okay, so the same principle you are applying over. Okay, I think Shaneem has also shared the amount of Goodwill. Great. Alright, so let's move on to the last part, and that is about computation of minority interest. Now, minority interest we have to show on two dates, on the date of acquisition and on the reporting date. So let us clear this part. So now, in relation to minority interest, we understand the percentage of minority interest is 20, correct? Percentage of minority interest is 20. So now, out of the net assets of the subsidiary company, 20% is what belongs to the minority. So now on the date of acquisition, so this is on the date of acquisition, what will be the share of minority interest? So this share capital, which was 1 lakh, it's 20% belongs to minority. So that means 20%. Yeah. Then the P&L balance, which was 60,000. P&L balance was 60,000. So 20% of this again belongs to minority. So this is 32,000 on the date of acquisition. Now this computation we have done on the date of acquisition. Okay. Now, can you tell me that whether on the reporting date, so now on the reporting date, should this minority interest change? If yes, can you also tell me the reason why should this minority interest change? I'm waiting for a response now. I'm repeating my question. On the date of acquisition, we understand minority interest is 32,000. Now, should this amount change on the reporting date? If yes, what is the reason for this change which should arise? I think you can easily answer this because I can see a lot of responses from Sakshi, Shameem, Kuluru has also computed this, Nakul has computed this. Quickly, you can tell me. Aditi was asking, sir, why profit of 20,000 has not been distributed in 80 or 20 ratio? See, profit of 20,000 was already distributed. Why? Because 15,000 dividend has gone out of this 20,000 profit. And you can see that adjustment has been passed. So that is done. Now the part which is belonging to minority will understand that now. Okay, Manish is saying, yes, sir, it should change, and that is because of the profits. Sanjay is saying, yes, it should change, and that is because of the declaration of dividend. Shameem has the same answer. Ramakrishna is also saying it should change, and that is because of the profits, and that's correct. Now, please understand that what is the portion of the minority interest? It's the net assets of the subsidiary. Now, if you look at the net assets of the subsidiary on this particular date, what was the total amount of net assets of subsidiary? 1 lakh plus 60,000. Okay. But when it comes to the year end, whether the net assets of subsidiary have remained same? No. Subsidiary has also earned a profit of 20,000, which would add to its net assets. So what would the amount of net assets become? 1 lakh plus 60,000 plus 20,000. So that means net assets of subsidiary at the year end is 1,80,000. Yeah. And this is because of the profits. Now, out of these profits, dividend has also been declared. So that has been paid. So 15,000 goes off. So what is it that is left? It's 1,65,000. So 1,65,000 is the amount of net assets of the subsidiary. Now, is it same which was there on the date of acquisition? No. So that's why minority interest will change at the year end. So let's understand how will it change. So now at the year end, what will be the amount of minority interest? Capital will remain same. So that's why this will again be 20,000. So we can say no change. Yeah, because of capital there is no change. But in the P&L, there is a change. What is the change? 60,000 was the balance. 20,000 was the profit earned. 15,000 is the dividend declared. So what does it become? 65,000. Now 20% of this will be the share of minority into 20%. So now instead of 12,000, what would it become? 13,000. So that's why at the end, amount of minority interest will become 33,000 instead of 32,000. Okay, clear on this? I'm hoping Aditi, you are now clear on this because I think this was also your question. Oh, so I can see same query from Aditi quite a few times. So I'm hoping Aditi, you are clear on this now. Nishma was clear on this, and Sakshi had the same answer that this is why the minority interest will change. Nakul had the same answer. Okay, great. So any questions, any doubts in case you have on this, please let me know. Before we move further, quickly, you can just let me know. Yes, any questions from your side? So with this, we'll just try to understand the computation of minority interest and the principle which is involved in terms of computation of the minority interest. Okay, so then we can move on to the next illustration, illustration number 3. So we are only practicing all of these questions for which concepts were discussed in the last session, and you would have already solved. But I can see for illustration number 3, there were a couple of queries. So I'm hoping once we go through this, you will be able to understand this in a better manner. Okay. Please go to illustration number 3, page 10.4. So Vishwa had a query on this. No problem. Anyways, we are solving this, so hopefully you should be able to understand now. Ramakrishna is asking, sir, in this illustration number 2, there was no share of dividend for the minority interest. No, it's not correct. There was definitely a share of the minority interest, because when the dividend will be declared, it will be paid to all the shareholders. So it's not like that the minority will not get the dividend. But the question did not require adjustment entry of this dividend in relation to minority. Please understand that. Yeah. Question only asked us that what will be the dividend adjustment entry for the parent. It was not talking about the minority. Now minority has also received the dividend. So that's why while computing the minority amount, we have adjusted this. Okay. So let's move on to this next illustration number 3. X Limited acquires 70% equity shares of Z Limited on 31st March X1 at a cost of 70 lakhs. So now, on 31st March X1, we can see X Limited acquires 70% shares of Z. This acquisition has taken place and 70 lakhs have been paid. Now we are also given the balance sheet of Z Limited, who is Z Limited subsidiary, on this particular date. So this contains the information about assets and the liabilities. The reserves of Z Limited are not given over here. Okay. Following revaluations have been agreed upon, not included in the above figures. Means the balance sheet information which is given to us doesn't contain any adjustments in relation to the revaluations which have been specified. PP has gone up by 20%, investments have gone down by 10%. Means there was a downward valuation in investments. Z Limited declared and paid dividend at the rate 20% on its equity shares on 31st March X1. Face value per share was ₹10. X Limited purchased the shares of Z Limited at the rate ₹20 per share. So now, if you look at this information, we are given face value of the subsidiary in Z. And we are also given the purchase price per share. Purchase price per share. So the total amount is already available to us. So 70 lakhs has been paid. This is the amount which has been paid. And per share amount is also available. So we can easily compute the number of shares which has been acquired. You are required to calculate amount of goodwill or capital reserve, whatever be the case, at the time of acquisition of Z Limited. So I think this is it. We are just required to compute this. We are not required to look into minority, no adjustments, etc. are required to be considered in relation to dividend in terms of the accounting entries. But yes, for the purposes of our computation, if there will be any impact, we'll have to consider that. So quickly, if you can just start solving this if you have not done already, and those who have completed, they can start sharing their responses. In this question, there are two adjustments. First is about the revaluation. Yeah, remember about the revaluation we discussed that whenever any investor will acquire the investee, In our case, X has invested in the shares of Z by acquiring the shares. So that's why what will happen? Its fixed assets, its other assets have got revalue. Now this revaluation may be upward or downward. But when it comes to the standalone financial statements of Z, whether such revaluations will have an impact? No. These will not go to the standalone financial statements of Z. These will only go to the consolidated financial statements. Why? Because these are for the purpose of consolidation only. These will not have any impact on the book values which are recorded in the standalone financial statements. So that's why when we compute goodwill or capital reserve, we'll have to consider these revaluations, which is not done currently. Secondly, for this dividend, we'll have to see as to what will be the adjustment. Okay. So now, first of all, what do we need? We need the net assets of the subsidiary because purchase consideration is already available. So we need the net assets of the subsidiary. So let's compute the net assets of the subsidiary. So the amount which has been paid is 70 lakhs to acquire this. So let's compute the net assets of the subsidiary. Revalued net assets. Let's compute this. So PPE has to be valued upwards. So the amount of PP is what? 120. So this has to go up by 20%. So 120 into 120%. Okay. So this will become 144. Investments. These are 55 lakhs. Now they need to be valued downwards. $55 into 90%. So this becomes 49.5. All right. Yeah. Then the other assets, current assets, loans, advances. Do we see any changes in them? No. They remain same. So we'll just pick up the same amount. Current assets, 70. Then we have loans, advances, 15. So they remain same. So the total assets that we get after revaluation is 278.5. All right. Now we need to compute the net assets, means the net worth. Now there are two ways to compute it. Either we pick up the shareholders' funds directly, which is not available in the question, or the other way is from the total assets. Now these are the total assets. From the total assets, we can deduct the liabilities. So if we can deduct the liabilities, we will get the net worth of the company. So do we have the liabilities? Yes. Debentures and current liabilities. These two are the items. So from this, what do we do? Less debentures and current liabilities. So the amount of debentures is 90 and 50 is the current liability. 90 and 50. So this is 140. 140 is the amount of liability. So if we reduce this, what do we get? 138.5. 138.5. Now this 138.5 is nothing but the net worth, or you can say the net assets. This is the net worth or the net assets of the subsidiary company. Okay. Now, for our purposes, what do we need? For our purposes, we need to look at those net assets or the part of these net assets which have been taken over by the holding company. And what is that proportion which has been picked up by the holding company? 70% of the total net assets. See, this is the total net worth of the subsidiary company. This entire net worth of subsidiary company doesn't belong to parent, because parent would have paid only for 70%, not for the entire 100%. So that's why, what is the share of parent in these net assets? So you can say share of X in net assets of Z. What would that amount become? That will be 70% of this 138.5 into 70%. Correct? Yeah. So this will become 96.9. So this is the part which belongs to the parent in terms of the share of net assets of the subsidiary. Okay. Now, we have computed the net assets of subsidiary which belong to the parent. Now, what is the next information that we need? Purchase consideration. So I just clear this part. Now, if you look at the information which is available in the question, purchase consideration is given to us, 70 lakhs. Okay. Now, in terms of purchase consideration, we can say that this is the amount which has been paid to acquire. Or in simple terms, we can say this is the cost of acquisition of the subsidiaries net assets, equivalent to 70%. But we also see that there is some dividend which has been declared by the subsidiary company. Let's get back to that part of the question. It says that on the date of acquisition, what was the date of acquisition? 31st March 2008. This is the date when acquisition has taken place. Z Limited declared and paid dividend at the rate 20% on its equity shares. So now, we understand that whenever Z Limited will pay the dividend, it can be out of two types of reserves. One which is pre-acquisition and second which is post-acquisition. Now, because this acquisition has taken place on 31st March, so any period which is after 31st March X1 is post-acquisition. But if Z Limited declares the dividend on this date, so this clearly shows that this dividend is getting paid out of the post-acquisition, pre-acquisition profits, not post-acquisition. Correct? It is very, very clearly given in the question. Okay. And if the dividend is given out of pre-acquisition profits, what do we need to do? We need to adjust the amount of investment which is being made by the parent in the subsidiary. So what is the amount of investment which the parent has made in the subsidiary? 70 lakhs. So this means that this 70 lakhs also includes a part of the dividend which has already been paid back by Z Limited to X. Means this 70 lakhs was loaded with that dividend amount. So effectively, X Limited has not paid 70 lakhs to acquire 70%. This 70 lakh has been paid to acquire net assets of Z Limited, plus this has also been paid to acquire the dividend of Z Limited. So we now need to compute that amount of dividend. Okay, yeah. So how do we compute the amount of dividend? We can get on to the number of shares, total cost of 70% equity shares of Z Limited was 70 lakhs. Okay. Purchase price per share was 20. Okay. So therefore, number of shares which have been purchased will be what? Number of shares purchased will be what? 3.5 lakh. So this is the number of shares which have been purchased. Now, if you look at the information of dividend, it says dividend amount was 20%. Yeah, dividend amount was 20%. Now, dividend will be paid on the face value. Face value per share was ₹10. So, what will be the amount of dividend per share? That will be 20% into 10. So, 2 per share. That will be the amount of dividend. So, what is the amount of total dividend paid? So, dividend amount will be 3.5 lakhs. These are the number of shares which belong to the majority shareholders into 2. So 7 lakhs is the amount of dividend which has been paid. Now, for the purposes of the cost of acquisition, we need to reduce this 7 lakhs. Why? Because 7 lakhs has been paid from the pre-acquisition profit, so that's why this will reduce the amount of investment. So the cost of acquisition was 70 lakhs, from which we will have to reduce dividend, which was paid out of pre-acquisition profits, 7 lakhs. So what do we get? 63 lakhs as the cost of acquisition. 63 lakhs we get as the cost of acquisition. Okay, clear on this? So now what do we get? 63 lakhs as the cost of acquisition. So 2 things were required to be computed. One was the cost of acquisition and second was the net assets. Both these amounts have been computed by us. So now it becomes very simple. Yes or no? It becomes very simple. So can you now quickly tell me whether it would result in goodwill or capital reserve? You can just start sharing your answers now, though I can see a lot of responses from you already. Manish has shared. Manish is getting goodwill of 26.95. Okay. Sanjay has computed capital reserve of 33.95. All right. Nishma is saying net assets were revalued. Capital reserve was 33.95, but I did not understand 63. 63. So I'm hoping that you have now understood this combination of 63 lakhs. Yeah. Krishna has also computed this. Ramakrishna is saying, sir, how do we know whether the loans advances are assets or liability? See, loans advances will always be assets until unless it's otherwise specified in the question. Okay, so I think Shameen has shared this complete computation. And Anish is saying Goodwill is 26.95. Okay, and Sanjay is saying, Sanjay is asking, sir, we did not reduce the dividend from net assets for the purposes of computation of holding share. So why will you do this? Because for the purposes of computation of holding share, we don't need to do that. We go back to that computation, that adjustment has already been done. We have computed the net assets. Yeah, net assets you will compute on the date of acquisition, and on the date of acquisition, the total amount of net assets which the subsidiary company will have, a proportion of this which has been acquired by the parent will go to them. That was 70%. So we have done this adjustment. Okay. In relation to this dividend, dividend will not impact the net assets. No, dividend will impact the cost of acquisition. All right. Okay, I think Manish has also changed the answer. Namrata has also computed this. Namrata is getting a capital reserve. Okay, so now for us it's very, very simple. Now for us, two things which were required: cost of acquisition. You can also give the reference of working notes. Maybe you can just say it's the working note number 2, the second computation that we did. So what did we get? We got 63 lakhs from this. And the net assets. You can see this was working note number 1. For this, we computed it was 96.95. Okay. And the amount is negative. So when the amount is negative, what does it become? It becomes capital reserve. All right. This would be considered as capital reserve. Yes. So let me just go back to your questions in case you have any doubts. Sanjay, I'm hoping you're clear on this now. What about others? Any questions from your side? Krishna has also computed this. I think all of you are getting the same capital reserve. If you have any questions, please let me know before I move on to the next part. Yeah, all done. Okay, Sanjay is clear, and Nakul has also computed this. Great. Okay, so now continuing on this adjustment related to dividend, whether it is out of pre-acquisition or post-acquisition, we will pick up one more example. We will discuss about this adjustment with the help of this illustration. So let's move on to illustration number 5. Okay. And you should also try to solve it on your own while we are solving it, but I'll be going a bit slow on this and you can just try to compute it on your own. H Limited acquired 3,000 shares in S at a cost of 4,80,000 on 31st July 2000 X1. So now you can see that the acquisition is not taking place on the opening day of the financial year or the closing day of the financial year, which is something we saw in most of our examples. Yeah. So every time it was either the beginning of the year or the end of the year. So that's why this adjustment related to pre-acquisition and post-acquisition was very, very simple for us. Now what do we see? That the acquisition has taken place during the year. So this is 1st July 2000 when H acquires S. H acquires S. 3,000 shares of S have been acquired. Out of 5,000. Okay. 3,000 shares out of 5,000 have been acquired. So what is the percentage which has been acquired? 60%. Okay. This means 60% has been acquired. 60% has been acquired. P&L account of this company for 2000 X1 showed an opening balance of 1,25,000 and profit for the year was 3 lakh. At the end of the year, company declared a dividend of 40%. So over here, we can see dividend has been declared at the rate 40%. Who has declared the dividend? Subsidiary. So this P&L of subsidiary. So when it says this company, what does it mean? Subsidiary. So subsidiary had an opening balance of 1,25,000. So 1,25,000 was from P&L balance at the beginning of the year. So this is the beginning of the year. And during the year, company has earned 3 lakhs. During this year, company has earned 3 lakhs. So this is the amount of profits. Record the entry in the books of H Limited in respect of this dividend and assume calendar year as the financial year. So this is 31st December 2000 X1. This is 1st January 2000 X1. Okay. Now very simply, you are required to compute the amount of dividend and also post the accounting entry. That's it. So it's a very, very simple thing which you are required to do. So can you just start computing this and sharing your answers. Yes, quickly. In this case, there are a couple of problems which should arise. Number one, the dividend which has been declared. Now, what do you consider this dividend? Whether this has been declared out of pre-acquisition profits. Sorry, pre-acquisition profits. Now, what is the pre-acquisition profit? This is the pre-acquisition profit. Why? Because this is the amount which belonged to subsidiary before the date of acquisition. And a part of this profits up to this date was also pre-acquisition. And the next part of this profit was post-acquisition. So first of all, we need to compute the amount of dividend. What will be the amount of dividend? And then we'll have to check whether that dividend is getting declared out of pre-acquisition profits or the post-acquisition profits. Because accordingly, the accounting entry will change. So now we can say all of this part is what? Pre-acquisition. And this part is what? This is post-acquisition. So anything which goes out of post-acquisition goes to P&L. And anything which goes out of pre-acquisition goes to the adjustment in the investment of the holding company. So that's why, even though the question is only asking for this information related to dividend and the accounting entry in relation to dividend, still we'll have to get into this assessment of pre-acquisition, post-acquisition. And in case it's the amount which belongs to pre-acquisition, adjustments in relation to that will have to be considered by us. Okay. So now, what do? First of all, we divide the profits of the subsidiary into pre-acquisition and post-acquisition. Yeah. So let's understand what is the amount of pre-acquisition profits. Opening balance will clearly be the pre-acquisition 1 lakh. Yeah. And for post-acquisition, do we say we have any opening balance? Profits for the year. We'll assume, because the question is silent on this, so that's why we'll have to assume that profits have been earned evenly throughout the year. And you'll have to give a note for this, that the profits have been earned evenly throughout the year. So, what do we say? That profits up to the 1st July 2000X1 will go there. So that means proportionate profits 3 lakh into 7 divided by 2. What does it become? 1,75,000. So the total amount becomes, and this post-acquisition profits will be profits from 1st August till the 1st December 2000X. So that means 3 lakh for 5 months, or you can say 3 lakhs minus 1,75,000, 1 lakh 20. Okay. Yeah. Pre-acquisition profits are also termed as capital profits. Post-acquisition profits are also termed as revenue profits for the purposes of our discussion. Okay. Now, This computation that we have done, that is 3 lakh and 1,25,000. This is the total amount of reserves or the profits of the subsidiary. But out of this, only 60% belongs to the parent. Entire 3 lakh doesn't belong to the parent. Entire 1,25,000 doesn't belong to the parent. Correct? So we can also compute here only the portion which belongs to the parent. So share of H in this 60%. So what would it become? 1,80,000. And this will be 60%. So this becomes 75,000. So the portion of post-acquisition profits of the parent is 75,000, and the portion of pre-acquisition profits of the parent is what? 1,80,000. Okay, yeah. So now I'll clear these numbers. Just remove this one. Now we will compute the amount of dividend which is required to be paid. So the question says dividend has been declared at 40%. And we are also given the capital of S Limited. Capital of S Limited. 5,000 shares into rupees under 5 lakh is the capital of S Limited. So dividend will be 40% of 5 lakh. That is 2 lakh. So 2 lakh is the amount of dividend which has been declared and paid. Yeah. 2 lakh is the amount of dividend which has been paid. And out of this 2 lakh, 60% will go to the parent. So share of H will be what? 60% into 2 lakh. That will be 1 lakh. This will be 1,20,000. This is the share of gain. Yeah. So now there are two situations, or you can say there are two assumptions we can draw over here. Because the question is silent, so that's why we'll have to draw the assumptions. What is the first assumption? That the profits for this year has been utilized to pay the dividend. This dividend of 2 lakh has been paid out of profits, which means these reserves have not been utilized at all. No. So entire dividend has gone out of the profits for the year. Though part of these profits will also be pre-acquisition and post-acquisition, which is correct. But we are saying that the dividend has been paid out of the profits and not the reserves. Okay. So let's suppose if we take this assumption, then how will this adjustment get reflected in the financial statements of H? Yeah, so let's get on to this assumption. You can give the reference of a working note to this computation that we've done. So we are saying case 1. Profits utilized for payment of dividend. profits for the year have been utilized for payment of dividend. Okay. Now, if the profits have been utilized for payment of dividends, this means entire dividend of 2 lakh is paid from 3 lakhs. Or you can say 1,20,000 out of this 2 lakh dividend, 1,20,000 belong to parent. So 1,20,000 dividend has gone out of this portion as well as this portion. Correct? Yeah. So now let's look at the share of H Limited in the profits for the first 7 months. Share of H in profits for first 7 months. You can say up to the 1st July. So what do we have? 1,75,000. Yeah, you remember this working? 1,75,000 was the proportionate profit. 3 lakh into 7 divided by 12. Yeah, into 60%. Into 60%. So you get 1,05,000. Okay. And profits for the remaining 5 months are what? Profits for remaining 5 months are what? 75,000. So 1,75,000 is this part. The remaining part is 1,25,000 into 60%. 1,25,000 into 60%. So this is 75,000. Okay. Yeah. So now the proportionate profits of H during this period and this period are 1,05,000 and 75,000. Okay. Now, if the dividend has to be declared out of this entire period, then what should be the ratio in which this dividend should get allocated? This ratio only, obviously, yeah. And we are limited to the amount of H. Now, in this question, you will have to remember one point, that we are not computing the amount of dividend. We are not making this adjustment for the entire dividend. We are only looking at the adjustment for the proportionate dividend. Proportionate dividend means the dividend which belongs to H. Only H means the 60%. Okay. So the dividend of H. So the dividend of H will be adjusted in the ratio of 1,05,000 is to 75,000. And dividend of H is what? 1,20,000. This we have already computed. Huh? So dividend of H we have already computed. So we are saying in what proportion this 1,20,000 will be allocated. This is the proportion. This proportion is pre-acquisition. And this proportion is post-acquisition. Means, what is the part of this dividend of H which will go to pre-acquisition? This part. And what is the part of this It will go to post acquisition, this part. Or you can say this ratio. Okay. Clear? So now, if you allocate this, what do you get? What do you get? We need to compute this. So this will become 1,20,000 into 1,05,000 divided by 1,80,000. Can you compute this and let me know what is the answer? Similarly, this will be 1,20,000 into 75,000 divided by 1,80,000. This 1,80,000 is nothing but the total of these two, because we are allocating this in this ratio. Yeah. So can you just quickly compute this and let me know what will be the answer? So 1,20,000. Let's compute this. Divided by 1,80,000 into 1,05,000. This becomes 70,000. This becomes 70,000. Okay. Yeah. So this comes out to 70,000. Okay. And this comes out to 50,000. All right. Clear on this? This becomes 70,000. This becomes 50,000. Okay. Yeah. So if we have understood what is the pre-acquisition period dividend and what is the post-acquisition period dividend, I think accounting entry will become very, very simple for us. Yes or no? So let's pass the accounting entry. In this case, accounting entry will become very simple for us. Now we are passing this accounting entry in the books of holding company. Please remember, we are passing this accounting entry in the books of holding company. I think Sanjay and Anushka have also computed this. Very good. So now, what will the accounting entry which holding company will pass? Holding company will say bank account debit. What is the total amount of dividend they have received? 1,20,000. 2. P&L. So they will take this part of the dividend to P&L. And what will be this part? This will be the one which belongs to post-acquisition period. The one which belongs to the post-acquisition period means this part. This will go to P&L. Correct? Yeah. So this goes to P&L. And the part which belongs to pre-acquisition, what was that amount? 70,000. Can you take it to P&L? No. That will go to the investment account. That will reduce the amount of investment. So we'll say to investment 70,000. Clear? Clear on this? Yeah? Clear on this part? In the question, you will always have to understand one fact. Whether the dividend is getting declared out of pre-acquisition profits or the post-acquisition profits. Because this is the only catch which may trouble you. Otherwise, the accounting entry is very simple. Yeah, because when we started the illustration, we could see that it was a very, very simple thing for us to do. But we didn't realize that this may have so much complication of breaking the profits first of all into pre-acquisition and post-acquisition, and then breaking the dividend, allocating the dividend on these ratios. Correct? Yeah. Okay. Clear on this? Okay. Now this was the first assumption, or you can say first scenario, wherein we assume that the profits have been utilized for payment of dividend. Now another assumption is also possible. Let's try to understand that. What is that other assumption? Just one minute. The second assumption could be that the profits which have come later means this period's profits have been utilized first for the payment of dividend instead of pre-acquisition profits. Means if the profit for this period was good enough to pay the dividend, then we assume that the profits of post-acquisition period have been used first of all to pay the dividend. And if there was any deficit in this, due to which dividend could not be paid, only then the pre-acquisition period's profits have been used. So we can say later profits. Later profits means later period's profits. Later period means this period have been utilized first. Have been utilized first before pre-acquisition periods profits. Now this is also possible. This can be an assumption. So this will not be as logical as the assumption number one. Okay, but still it may happen. So now what do we do in such a scenario? I think now it becomes very, very easy. Yes or no? Now it becomes very, very easy for us. Why? Because now we understand that the dividend which has gone out has first of all gone out from this. So we now need to compute it accordingly. So now whole of 75,000, that means share of H in profits of S after 31st July would be received and treated as revenue income, and remaining dividend. What is the remaining dividend? 1,25,000 less 75,000. So now, for this period, what was the profit? For this period, what was the profit? For post-acquisition, profit was 3 lakh into 5 divided by 12. Remember, we computed this. 3 lakh into 5. If you can go back to your working note number 1 over here. 3 lakh into 5 divided by 12. Okay. So this is the portion of profits in the post-acquisition period. Out of this, 60% we discussed belongs to H. Yeah. So the profits belonging to H were 75,000. X share in post-acquisition profits 75,000. So now we understand that the dividend equivalent to 1,20,000 has to go. dividend equivalent to 1,20,000 has to go to H. And what are we assuming? We are assuming that first of all, this 75,000 will be consumed for paying the dividend to H. So total dividend for H is 1,20,000. Total dividend for H is 1,20,000. For this, we are saying post-acquisition profits will be utilized first. Means 75,000 will be utilized for this. So what are we left with? 45,000. So where will this 45,000 come from? Pre-acquisition only. So this will become the balancing figure. Obviously, because when the dividend will be 1,20,000, for which we are now assuming that 75,000 is utilized first of all. So what are we left with? Balancing figure. So this will go out of pre-acquisition profits. Okay, simple, easy to do. Yeah. This scenario will be very, very simple, very, very easy for us. But as we discussed, that you should not take this assumption unless it's specified in the question. If the question is silent, then definitely the way it's computed in the solution, you will have to take both these assumptions. Huh? Okay, clear? Clear on this? Now, in this scenario, what will be the accounting entry? Now it becomes very simple. Same way accounting entry will have to be passed. Holding company will say bank debit 1,20,000 to P&L. Now in the P&L, the profit part is what? 75,000 belonging to pre-acquisition period. Two investments, 45,000. Okay, yeah, clear on this part? I'm hoping with this you would have got more clarity in terms of making this adjustment of dividend which goes from subsidiary to the parent, in terms of whether it should be considered as the one which is for the pre-acquisition part or the one which is related to post-acquisition part. Anushka is asking, so this 45,000 will come from the investment account? No, this will not come from the investment account. This will get reduced from the investment account. See, investment account has been reduced. Investment is the investment of HNS. It's an asset that has got reduced. Yeah, Manish, that's correct. That 45,000 will be deducted from the investment. Mohammed is asking, so why investment account is credited in the books of holding company? Because that is how the accounting standard requires you to do. That the one which you are receiving out of pre-acquisition should reduce the cost of investment. So now if you have to reduce the cost of investment, what will you do? You will have to credit the investment. Go back to the principles of AS 13. Okay. Anushka is clear on this. Manish is also clear on this. Yeah. So with this, I think we have spent quite a good enough time on this adjustment related to dividend, minority, and the goodwill or capital reserve, but still there are a lot of aspects in relation to all of these things which are going to be discussed more and more. So what we can do is we can now take a break of 10 minutes. So after the break, we will continue with our discussion on CFS and we'll pick up the next topic in this. Okay, so let's take a break now. Amen. Yeah, we can start. All right. So we were talking about the minority interest and some of the concepts. So I think there's a small correction over here. So this is not pre-acquisition, as Rama pointed out. This is post-one. So you can just correct it in your answer. Okay. So now moving further. In relation to minority interest in the consolidated financial statements, it may happen that the share of minority results into a loss. Means the subsidiary is incurring the losses and the losses are getting attributed to the minority. Yeah. Why? Because whenever subsidiary will have any profit or loss, whenever subsidiary will have any profit or loss, it will go to two parts. One, the holding, and second, the minority interest. Okay. Whether it's the profits or the losses, it will keep going to parent and the minority interest. Now, it may be that the subsidiary keeps incurring the losses. So year one, subsidiary had a loss, so loss will get attributed to minority. Year two, again there's a loss, so the net assets of subsidiary will go down and the proportionate share of minority will also go down automatically. Yeah. Third year, again there's a loss, so the loss will again get attributed to minority. Fourth year, let's suppose again there is a loss. So year on year, because of the losses which get attributed to the minority, it may happen that the balance of minority may become zero and starts becoming negative. Yes or no? Because we have seen that year on year, we need to update the balance of minority. And that was because of the profits or the losses. So the profits will increase the balance and the losses will decrease the balance. Remember, we discussed that the profits were increasing the balance of minority. Similarly, losses may decrease the balance of minority. Now the losses could be to such an extent or maybe so significant that the balance of minority may become zero and may also starts becoming negative. Now, what do we do in such a scenario? If the losses keep coming to the minority or keep coming from the subsidiary, standard says that the minority balance should be restricted to zero. Means any further loss share of minority, because of which the share of minority will become negative, should not be attributed to minority. Instead, what will happen? That should get attributed to holding. So let's suppose in these 3 years, there were losses because of which balance of minority has become zero. Nil. In the 4th year, when again there is a loss, now the proportionate share of minority in these losses will not go to the minority. Instead, this will go to the holding. This will go to the holding. Yeah. And why is this done? So that this balance doesn't become negative. Number one. Number two. Now, if you see in the 4th year, in the 5th year, when again there's a loss, holding is absorbing the losses of minority. Let's suppose it absorbed loss of minority equivalent to 10. Then it absorbs loss of minority equivalent to 10. Okay. Now let's suppose In the 6th year, there's a profit, and the share of profit of minority is 30. Let's suppose share of profit of minority is 30. In this 6th year, standard says, what should we do? We should first of all neutralize the impact of this lost share of minority which went to holding company. Means, first of all, 20 rupees, even though it belongs to the minority, will go to holding in such a way that this becomes neutral, and the balance amount will go to the minority. Means, in the 6th year, even though the share of minority's profit is 30, minority will only get 10. Why? Because 20 will get adjusted with the share which the holding has absorbed in the previous years. Alright? Yeah. Now, what we will do is we will pick up an example. In fact, it's a detailed example. We'll try to solve this complete example, and through which we will get into further understanding of this concept. Yeah. And once we are done with this, then we'll again come back to this concept. And with this, I'm hoping you will get more clarity in this. Okay. So let's get on to illustration number 4 now. Let's get on to illustration number 4. So you can go to page number 10.25. Illustration 4. Yeah. So let's look at this illustration. A Limited acquired 70% equity shares of B Limited on 1st April 2000X1 at a cost of 10 lakh when B Limited had equity share capital of 10 lakh and reserves of 80,000. So now on 1st of April X1, A Limited acquired B. Okay. And A Limited, in terms of its acquisition, what? 70%. So A Limited acquired 70% shares of B. Yeah. In the 4 consecutive years, means one, 2, 3, 4. So this will be the 1st March X2, 1st March X3, 1st March X4, 1st March X5. Yeah. In the 4 consecutive years, B Limited fared badly and suffered losses of 2,50,000, 4 lakh, 5 lakh, 1,20,000. So in the first year, there's a loss of 2,50,000. It's a loss, so I'm making it negative. Then there's a loss of 4 lakh. Then there's a loss of 5 lakh. Then there's a loss of 1,20,000. Okay. Thereafter, in 5-6, the 1st March and 6, B Limited experienced turnaround and registered an annual profit of 50,000. So in this year, there is a profit of 50,000. Yeah. In the next 2 years, X6, X7, X7, X8, again there were profits. First March X7, first March X7. Okay. In the next 2 years, there were profits. 1 lakh and 1 lakh 50. 1 lakh and 1 lakh 50,000. You are required to show the minority interest and cost of control at the end of each year for the purposes of consolidation. Yeah. So you are just simply required to compute minority interest at the end of every year. Yeah. So can you start solving this? I'll also get on to the solution. Can you start solving this? In the meantime, I'm just going through some of your queries, but can you start solving this? I'll also get on to the solution, but you should try to solve it on your own. Namrata is asking, sir, why the holding company absorbs the loss of subsidiary? See, that's the requirement of the standard. As regards the logic, it just say that the standard doesn't want that the minority balance should become negative to be reflected in the financial statement. So that's why this accounting treatment is suggested. Yeah. Manish is saying principal. Oh, so what's the problem? Principal here may be that it's a limited liability company. See, both the companies are limited liability. Even the holding will be limited liability. So it's not that holding will not be a limited liability company, but the idea is that if there are losses which are getting passed on, then the losses are not getting attributed to minority. Those are getting passed on to the holding, and that is only when the minority becomes nil. So it's not that all the losses are getting attributed to the holding always. No. Only and only when minority reaches to a level where it becomes zero, then the losses are getting passed on to the holding. Okay, clear on this? Yeah. Any more questions from your side? I'm hoping that you have started solving this. All of you? Yeah? You started solving this? You can just start sharing your responses for every year. Huh? For every year, you will compute minority. So every year, you will compute minority. So once you solve it, start sharing your responses for every year. Huh? So now I'll also go to the solution. So this will be a bit of lengthy computation because multiple years are involved in this. Yeah. So first of all, we should draw this table. We have this here to start with. We will first compute minority on the date of acquisition. That is something you'll have to remember. Even though the question doesn't require, you will have to compute the minority on the date of acquisition also. Because that is the starting point from the minority. Okay. So now, first of all, you will compute minority at the date of acquisition. What is that date? 1st April. And that's why you will not have any profit or loss on this date. Any profit or loss you write it, then we'll get the minority calculation. Yeah. So now for us, if you look at the reserves which are given in the question, A Limited has acquired B for 10 lakh. So A Limited has paid 10 lakhs. Okay. And B had capital of 10 lakhs and reserves of 80 lakhs. B had a capital of 10 lakhs reserves of 80. So this seems to be the situation of B. Okay. 10,80,000 is the total size of net assets. Now, on the date of acquisition, what will be the portion of minority? Simply 30%. If you compute minority, this will be 30%. So 10,80,000 into 30%. So this becomes 3 lakh. Okay. Yeah. Right. So now we come on to the next part. At the end of the year means X1, X2. 2000 X1, X2. Now during this year, there is a loss. 2,50,000 is the loss. $2,50,000 is the loss, and 30% of this loss belongs to minority. 30% of this belongs to minority. So what do we do? We will take it to minority. This will go to the minority account. So minority opening balance was 3,55,000. Sorry, 3,24,000. Loss share has gone to minority. So what will the balance of minority? This will become 2,49,000. And this balance is on 31st March X2. So instead of balance, I'm just saying 1st March X2. Thanks. This is 2,49,000. So minority has got reduced to 2,49,000. Okay. Out of this 2,50,000, 30% belong to minority, but 70% belong to parent. Yeah. So that will go to the consolidated P&L of the parent. Consolidated P&L of parent. And this consolidated balance of parent, we are computing only the added part, because question doesn't have the opening balance. So that's why either you can write additional consolidated P&L balance, or you can say consolidated P&L balance. Yeah, so 70% of this 1,75,000 will go to the parent. Yeah, clear? And we can also compute the cost of control. That is also required to be computed. So now what is going to be the cost of control? What is going to be the cost of control? So can you compute and let me know what is going to be the cost of control? So 10 lakh has been paid. Yeah. So 10,80,000 worth has been acquired by paying 10 lakh. So purchase consideration is what? 10 lakh. From this, net assets of subsidiary need to be reduced. What are the net assets of subsidiary? Less proportionate net assets of B. What are proportionate net assets of B? 10,80,000 into 70%. Into 70%. So what do we get? We will get 2,44,000. This is the cost of control. Okay. Clear? At the end of the year, this will remain same. Now, moving on to the next year. Now, X2, X3. 2000 X2. Then next year, again, there is a loss. What is the amount of loss? 4 lakh. Out of this 4 lakh, 30% will again go to the minority. Correct? So let's take 30% to the minority. So 1,20,000 goes to the minority, which will result in a balance of minority on the 1st March X3. Balance will be 1,29,000. This will be 1,29,000. Okay. I think so far it's quite easy to compute. There's no complication. Yeah. And 70% of 4 lakh means part of parent will go to the consolidated P&L. 2,80,000 will go to the consolidated P&L. Cost of control will remain unchanged. That will not change. That will remain same. 2,44,000. Yeah. Yeah. For 2 years, let me just see who has been able to compute this. Let me just see your answers. Okay, I think Sakshi has completed for the first year. Okay, and Sanjay has computed for first year. Sanjay has computed. I think Sanjay has computed up to this. Okay, great. Sanjay has got 1,29,000. Very good. Then Sakshi has computed some 75,000. I think you're sharing all the numbers. Give me the balances of minority interest and the portion of consolidated P&L. These two are good enough. If you want to share the calculation, that is very good, but don't specify it separately. Yeah? Manish is saying 1,45,000 loss will be borne by holding. I think you are moving on to the next years. So I'm talking about this year only. Yeah? Sanjay has computed this. Okay, great. He's getting the same answer. Manish, I think, has moved on to the next years. Okay, yes, Nakul, you are right. Cost of control is 2,44,000. You are with us. Anushka is saying, how is 2,80,000 coming? Very simple. Huh? So 4 lakh into 70%. See, what was this 2,50,000 into 70%? 170. So again, 4 lakh loss into 70%. Please remember that 30% loss belongs to the minority, which has gone to the minorities account. But 70% loss belongs to whom? That belongs to the parent. Where will the parent record this? In the consolidated P&L. So this is that consolidated P&L. So 70% goes to the consolidated P&L. So it's the share of the parent. So you can say it's the share of minority, it's the share of the parent. Very simply. Yeah. Maybe for your understanding, you can say it's the share of parent. Okay. Now clear on this. Kushi is asking about cost of control. See, cost of control is very simple. Huh? Goodwill, how do you compute? This is cost of acquisition. This is given in the question. If you look at the information, Kushi, 10 lakh was paid to acquire 70% shares of B. Now, What is the proportionate net assets of B? 10 lakh plus 80,000. This information is given in the question. Huh? 10 lakh plus 80,000. 10 lakh 80,000 is the total net asset size of B. Total net asset size of B is 10 lakh 80,000. 70% of that is what? The part which belongs to A. A has acquired only 70%, for which A has paid 10 lakh. So the purchase consideration. This is what? Purchase consideration. This is purchase consideration. From the purchase consideration, what do you reduce? Proportionate net assets of subsidiary. So proportionate net assets of subsidiary are what? 10 lakh 80,000 into 70%. Okay, so what do you get? 2 lakh 44,000. Now you're clear. Now you're clear. Kushi, you're clear. I think Yuvraj had the same query. You're clear. I think Sakshi is moving on to the next year. So we also need to catch up very fast. Okay. So Anushka is clear on this. Yuvraj is also clear on this now. Great. So up to this year, I'm hoping all of you are with me. Correct? Yeah. Okay. Let's move on to the next years. So now, for 2 years, we have completed. So now what I will do is, I will move on to the next year. I'll just clear some of these remarks. Huh? I'm hoping you would have noted it. So I'm clear. Okay. And for the purposes of calculation, I'm just clearing this part. I'll use this balance. Huh? You should only write down in the quantity, but because I have limited space, that's why I'm moving this number upwards. First March X3 balance. For me, it is 1,29,000. This is 1,29,000. So minority is reduced to 1,29,000. Yeah. And this is 2,44,000. This is 2,44,000. Okay. Yeah. So I keep adding the years like this. Now moving on to the next year means X3 X4. So 2000 X3 X4. Once again, there is a loss of 5 lakhs. Once again, there is a loss of 5 lakhs over here. So out of this 5 lakh, what will happen? 30% will go to minority. So 1,50,000 goes to minority. 1,50,000 goes to minority, and 70% will go to the parent. So 3,50,000 go to the parent. $3,50,000 goes to the parent. Okay. So let's look at the balance of minority. 21,000 negative. So we have a problem now. Let's understand the problem. Balance of minority has become negative. Balance of minority has become negative. But the standard says that don't make the balance of minority as negative. The maximum you can do is make it 0. But now who is going to help the minority? Who is going to help the minority? Parent will have to come in and help the minority in this case. So now this loss of 21,000, we are not talking about 1,50,000. 1,50,000 will go to the minority. But out of this loss of 1,50,000, 21,000 is the part which is bothering minority. Why? Because it is making its balance negative. So this loss of 21,000 will be passed on to the parent. Parent will have to absorb this in such a way that minority is 0. So loss of minority borne by parent 21. So what did we do? We passed on its loss to the parent. So we take its loss to the parent. So loss of parent will increase, but it will become 0. So I'm making it nil. So we can say 31st March X4. First March X4 balance is what? Nil. Now the parent has absorbed this loss, but even though parent has absorbed this loss, what will the parent do? Parent will keep this separately in its notes. Notes means in its records. Parent will know that a portion of its losses. Now the portion of losses of parent is what? 3,50,000 plus 21. That the portion of losses of the parent is not completely of the parent. It also belongs to the minor, which the parent may be allowed to adjust if there are some profit shares of minor. So that's why we will keep a separate note of this type of loss which is borne by the parent. So we are saying minorities share, minority share of losses borne by A. So A will keep a track of this. Just to keep a track of this, 21,000. This is the loss which it borne. And the balance means 21,000 is the one which it carries in its balance. So this will not reflect anywhere in the financial statements. Don't think that this will go to the balance sheet of the people. No. This is only for the purpose of tracking. That's it. Okay. Yeah. This is only for the purpose of tracking. Yeah. Now, what will happen? Next year, X4, X5. Again, there is a loss. What's the amount of loss? 1,20,000. Now, out of this 1,20,000, 30% belongs to minority. So 36,000 goes to the minority, and 70% belongs to the parent. So 84,000 goes to the parent. Now, once again, there is a problem. If this loss goes to the minority, once again minority will become negative. So what will happen? Once again, this loss will be shifted to the parent. So loss of minority interest borne by parent. 56,000. So this will become nil. This will be passed on to the parent. And a separate record will also be kept for this. So 36,000 has come in this year also. So the total amount of the minorities loss which the parent has absorbed so far is what? 21,000 plus 36,000. That is 57,000. This continues to remain same. Okay. So parent has so far absorbed 57,000 loss of the money. Okay. Clear on this? Yeah. Okay. So now, once again, I will clear this part. I will take this loss. So this is the first March X5. balance. It's nil. Correct? Yeah. So I will it over here. So this is 31st March balance. I will make it nil. Yeah. And on this 31st March, it's 5. Say that this balance is 57. You will have to just continue in your notes. I need to delete this part because of this space constraint. Okay. Now, moving on to the next year. In X5, X6, now finally there's a profit. Now finally there's a profit. There's a profit finally. 50,000. So what will happen? 30% will go to the minority and 70% will go to the parent. Now, what should we do? Should we consider balance of minority as 15,000? No. Finally, when the minority has started receiving profits, so what will the parent say? Parent will say that in the last years, I have been absorbing your losses. And now because you have started generating profits, so that's why I will pass this loss back to you. But its profit is limited to 15,000. And what is the loss which parent had absorbed in the previous years? 57,000. So what will the parent do? Parent will pass back this loss of 15,000 to the minority. So the profit share which the minority will pass to the parent, or you can say the loss which the parent will throw back to the minority. It's one and the same thing. So this 15,000 goes away. Such that it becomes nil, and this 15,000 will come over here. Yeah, and over here, what will happen? Again, they will have to keep a track. Now, this 57,000 balance will go down. Why? Because this has been passed on to the minority. Correct? Clear on this? Yeah. I'm hoping that you would have now understood this computation. Now moving further, in the next year, 2000, okay, so 1st March X6 balance is this 2000 X6 X7. In this year, again, there's a profit of 1 lakh. So same thing will have to repeat. I'm hoping you would have understood what is now required to be done. 30% will go to the minority. And 70% goes to the parent. But still 42,000 losses are the one which the parent needs to push back to the minority. Or you can say minority needs to pass profits equivalent to 42,000 to the parent. So what will the minority do? This profit share will be transferred to parent, such that it once again becomes nil. It becomes nil once again. Okay. So parent will get 30,000 over here. 30,000 over here will be a separate record, and now this is reduced to 12,000. This will remain same. This will remain same. Okay. Yeah. So once again, what I'll do is I'll just clear this part because I need some information. So this is the first March at 7. Okay. So once again, I'll clear this. Make it nil. First March 7 minus. Is what? Nil. Okay. And this is 12,000 to me. This is now 12,000. So we have moved on to the last year now. So we have moved on to the last year. Okay. Let's see how the adjustments will be required in the last year. X7, X8. So 2000, X7, X8. Now there's a profit of 1,50,000. Once again, 30% will go to the minority. So 45,000 profits will go there. And 70% will go to the majority. 1,05,000 will go. So now, should we do the same thing again? That entire profits of minority should be transferred to the parent? No. Why? Because now minority has got significant profits, means which are crossing the share of losses which it passed on to the majority in the previous years. So only to the extent this balance is left, only to the extent this balance is left, that will get transferred to the parent. So transfer of profit share from minority to parent will now be limited to 12,000. And hope you have understood how did we get 12,000. This is the balance which we need to make zero. Why? Because profits are coming in. So now this becomes 33,000. So now on 31st March X8, minority will start showing a balance which is more than nil. Right? Why? Because minority has settled its account with the parent completely. So parent will get this 12,000 more. This 12,000 again, the separate reports which the parent was maintaining will again be recorded over there. And now this becomes nil. So the account of parent is completely settled by the minority. And this continues to remain same. Yeah. So at the end of this year, minority interest is what? 1,70,000. Correct? Clear on this? Yeah. So let me just move on to your solutions also and your responses also. And if you have any doubts on this point that we have discussed. All right, so I think Manish shared this 57,000. 57,000 was for the previous years. Okay, great. Priyanka has also solved this. 33,000 is what Priyanka is getting. Very good. And I think Priyanka has computed this 1,70,000. This one also, yeah, that's also correct. Sakshi is also getting the same balance. And consolidated P&L. See this consolidated P&L, please remember this is the P&L amount. This is not the balance. Because year on year we have not accumulated the balance. We have just computed the profits and tax. Okay. Okay, Manish has solved this. He's getting 33,000. Very good. Anushka has also solved this. Anushka is getting the same answer. Anant Raman has understood this. I'm hoping he is also getting the same answer. So any questions, any doubts in case you have on this, please let me know. If you've got any questions, any doubts on this, please let me know. Okay, I think I can. Yeah, so a couple of more responses from Jamil and Sanjay. They are getting the same answers, and I'm hoping that all of you have completed on your own, which is very, very good. So maybe part may have been followed by you in terms of whatever I was solving, but if you have been able to solve it on your own, that will be very good. So now what you should do is just go back to the solution of the study material. Please go to the solution of the study material. Before the solution starts, there's a para. Yeah, there's a para. Please read this para. Now you will be able to understand and appreciate each and every point which is written in this. And you can also make this small para as your notes. The small para will be good enough for the purposes of your notes. Okay. So I'll just quickly read this for you. The losses applicable to the minority in a consolidation may exceed the minority interest in the equity of the subsidiary. The excess and any further losses applicable to the minority are adjusted against the minority interest except to the extent that minority has a binding obligation to and is able to make good the losses. Means only and only when it will be specified that minority has a binding obligation to bear the losses, even if it becomes negative, only then you will take it, otherwise not, which will not happen. If the subsidiary subsequently reports profit, which started happening from this year. From this year, subsidiaries started reporting profits. All such profits are allocated to the majority first of all. This is the profit which was allocated to majority. Even though it belonged to minority, it got allocated to majority. Until majority share, who is majority? Parent. Until parent share of losses previously absorbed by the parent, this was previously absorbed by parent, has been recovered. Means minority will have to settle this account first of all, completely. Only and only then minority will be able to take its balance, otherwise not. Clear? Clear on this para? Yeah? Okay, great. So Nakul has also understood this. Very good. Manish is saying that if there is no such condition, then this loss will be shown at the asset side. No. So generally you will not see that happening. This exception is something which you have to read in the contracts of this shareholders, wherein if this understanding has been agreed, which will generally not take place. Okay, and that's why you will always be looking at this accounting only unless it's been specified otherwise in the motion. Yeah, in such a case it will become very, very simple. Every year, whatever is the loss, pass it on to the minority and the parent. Yeah, so that situation will not arise, at least for you for the purpose of your examination. No? So don't think in that direction. No? All right. So with this, what we can do is we can just wind up our discussion for today. We are still not done with consolidation. As you can understand, it's a big topic and there are multiple concepts which are required to be understood. So we'll continue on consolidation in the next session. But once again, I would say it is very, very important that before we meet next, you revise everything that we have discussed in today's session and the last session. Only then you will be able to continue to appreciate the discussions that we are going to do in the next sessions. Okay. So thanks to all of you once again for your time and for your wonderful participation. Thanks so much.